Hi guys, my name is Vlad. I'm a real estate agent with Keller Williams, and this is the second installment of a program that my partner Mitra and I have started about 2 weeks ago, where we're still talking to a mortgage broker from Mortgage Outlet. His name is Greg Kalanjian, and the second topic that we're covering is about a non-resident program for mortgages. That's coming up next.
Greg, thanks for being here again today. Today we are going to talk about the non-resident program. Greg, can you tell us what really is the definition of non-resident program?
That's a very good question, actually. So we can define, there are two types of clients we can define them as non-residents. First, it could be a non-Canadian person who's a foreign resident, foreign passport, and is living abroad and is working there, and he wants to buy a property in Canada for various reasons, either secondary property, loves Canada, or has family here and travels a lot and wants to buy one. The second is he's an actually Canadian person and then got himself a job outside of Canada. It could be in the States or it could be any part of the world. So he found a job, he moved there on a contract or whatsoever. So residency is defined by where you live in, not by the passport you hold. So non-resident could be, again, Canadian living abroad or an actual foreigner.
That's great. So as a non-resident Canadian, what would be the minimum requirement for down payment?
So when non-resident Canadian or not, the requirements are actually the same. It will be 35% down payment of the purchase price. Of course, when we go above a very expensive purchase price, then the requirement can be a little bit higher, but a normal up to 1 to 1.5 million property you're buying, the requirement is to have 35% down payment. As far as the down payment is concerned,
Okay, great. Any limitation when they apply for a mortgage qualification? Do they have any limitation with respect to their job tenure?
Good question. Again, we will treat the non-resident the same qualifying guidelines as a Canadian. So the most important thing is that the non-resident person, it has to have employment, salaried income. He cannot be self-employed. He has to be salaried employed by some company, whichever country he's lived in. So as long as he can give us an employment letter and also, let's say, either a pay stub, or not every country has a pay stub, or he can show us in his bank statements last 3 to 6 months that the down payments are, the pays are getting deposited there, then we will treat it as a regular Canadian, regular income. If it's in US, we can convert it to Canadian, and we can qualifying based on Canadian guidelines.
Okay, great. So what I'm hearing, your non-resident can be Canadian or just a foreigner, does not matter.
Absolutely.
With 35% down payment, so long as they are not self-employed.
Exactly.
They're salaried.
Exactly.
They can apply for a mortgage.
Exactly. So now, if they don't have a credit bureau, if they're like a foreigner, so that's okay. They can provide us either an international credit bureau, or maybe they can provide us, let's say, 12 months of bank statements of their credit card they have in their own country. So that can help us build a credit history for them. And if they're actually a non-resident but from the US, they're US resident, we can even do it with 20% down payment.
Wow.
Yeah.
That's excellent.
Yeah.
Thanks for the opportunity to share this valuable information with us, Greg.
Absolutely. Thank you.
See you next time.
Yeah, thank you.
All right, guys, that wraps it up for the second installment. I hope you enjoyed the material that we've given you. If you did, please consider subscribing. Don't forget to ring the notification bell so as not to miss any material that's coming out every single week. Comment in the comment section below so we can improve our game and deliver better material for you every time we're coming out with a new video. And also hit that like button if you like the video. See you next week.